Welcome! This video is about 8-2 and 8-3, and we are starting a unit about the stock market. We'll talk today about stock market data and some charts that are used to organize stock market data. We'll talk about to use stock market data to follow the daily progress of a corporate stock. We'll interpret a stock bar chart and interpret a stock candlestick chart and what those different kinds of charts are. The first question I'd love to have if I was in class was, what do you know about the stock market? If you're in class, please pause the video and discuss this with someone around you. If you're not in class, you may think about, well, that's a place that you can invest money. It somehow goes up and down. I'm guessing you don't know a lot about kind of what it is and how it works, but you know that it's there and it's a thing people talk about. So we'll talk about that. The first thing you need to understand is, what does it mean by shares of stock? So shares represent, a share represents a share of ownership in the corporation. Okay, so corporations that are traded publicly, their stocks are, then their business is broken up into lots of little pieces called shares. Okay, and there's lots of them. And so you can own a very, very small piece of a corporation, not enough to have any say in what happens in the corporation, but you can own a little piece of that corporation. And as that corporation becomes more valuable or less valuable, then the value of your stock can rise and fall with the value of that corporation. So that's what a share of stock is. So we next need to understand what a stock market is. A stock market is an institution where stocks are bought and sold. That's all it is. It's an institution where you can buy and sell different pieces of stock. So two examples of that are NYSE, which is a stock market called the New York Stock Exchange. Okay, and a second one is the NASDAQ, which is a stock market called the National Association of Securities Dealers Automated Quotation System. Those are two stock markets, but there's one in Japan, there's lots of countries have their own stock market as a place to buy and sell stocks in that country. Okay. If you need more time with this vocab, you can pause the video at this point, but otherwise I'm going to keep going. That's just some basic definition about stock and stock markets before we get started. Now, the next thing to look at is we'll be looking at kind of some charts that look like this. Okay. And you should be aware of what these different things mean. So here is the date. So this is for May 5th. Last is the price. So one share of stock was traded for $52.20 was the last trade on May 5th. Okay, and that was the time at which it happened. So that's kind of when it ended. Okay, the change, CNG is change, is the difference between the closing price of yesterday, which is May 4th, and today, which is May 5th. So the difference between closing prices is given right here in the change between closing prices. The open is the price of one share of stock as the first trade of the day. So it gives you kind of a starting for the day and ending for the day, but also gives you a change from day to day. Okay. You also get a 52-week high. That's over the last year. What is the highest price for one share of this stock? This is XYZ Corporation. And the 52-week low is the lowest price that a share of this stock was ever traded for. Okay. The sales in hundreds is a measure of the volume of how many shares are being sold this day. So on this day, this many hundreds of shares of stock were bought and sold. So again, there's lots and lots of shares of each company. The high and the low are the highest price and the lowest price of one share of stock during this entire day. So that's kind of all the information there from that day. Summary data of what happened that day in trading. Here's the second day to also kind of look at. So a question we can look at to better analyze this data is what is the difference between the high and low prices on May 5th? So this is May 5th right here. I'm looking at the difference between the high and the low price on May 5th. Well, that would be the 52.60 minus $49 would be that difference. And so you would simply take $52.60 and subtract $49 and you would get $3.60 as the difference between the high and low prices on May 5th. A similar question is, what is the difference between the high and low prices on May 12th? So you can pause the video at this point and try to figure out what is that difference for May 12th. So go ahead and pause the video. Okay, just like before, it was the high price minus the low price, which is $51.40 minus $49.90, which gives you a difference of $1.50. Okay, and that's per share of stock. So here I have the exact same chart that we saw before, but some more questions about that chart. Number 3 asks, let me get a piece of paper here to kind of cover up as I go. The question asks, at what price did XYZ Corporation close on May 4th? Well, I don't have data for May 4th, but I do have this change, okay? And so this is the difference between the previous day's closing price and the present day's closing price, okay? And there's kind of 2 ways to do this. One way is by looking at kind of an equation and you saying, you got a second piece of paper here. You saying, well, I know that the current closing price was $52.20 minus the previous day, I'll call it X, and that difference is equal to $2.61. This is one approach to do it, a more algebraic approach, okay? And once you got an equation, you can just solve it. So one way to solve this is by subtracting the number, so subtracting 52.20 from both sides. Okay, you then get negative x, sorry it's so small, negative x equals negative 49.59, and then you divide by negative 1 or multiply both sides by negative 1 and you get x is equal to 49.59. Okay, that's a more algebraic approach to solving this equation. Okay, the other approach is to say, you know what, this is the change. So there was an increase, because it's positive, an increase of 261 from the previous day, which means I could do the opposite of this sign to go backwards in time, and I could do 52.20, the current ending price, and I can then subtract, do the opposite sign and subtract 261 and get the same number, 49.59, either way, okay? I don't care which approach you take. Okay, if you take the algebraic approach or the thinking through the change approach, my guess is that this is probably easier for many of you, but keeping that sign correct will be a tricky piece. It's a change. It's the opposite of before, because you're kind of going backwards in time. So keeping that straight will be a very common place to make a mistake. Okay, so the next question that we might ask is about percent increase. So use the May 4th closing price, which I just found. Use the May 4th closing price and the May 5th closing price to find the difference in prices as a percent increase. Now, the idea of a percent increase is a new one for us, okay? And the formula for that is this right here. So in general, percent increase is the new, in this case, price, minus the original price divided by the original. That'll give you a percent increase, but it's a percent, so times 100. Okay, so in this case, I'm finding the percent increase from the May 4 closing price to the May 5th opening price. Okay, so the new in this case is the May 5th opening price. Okay, which is $50.10. Okay, move up a little bit. And the original price, or the previous price, was the May 4th closing price, which is this $49.59. Okay, divided by the original, which again is $49.59, times 100, and you get 1.03%. The percent increase from the May 4th closing price to the May 5th opening price is a change of 1.03%. Okay, there you go. So in number 5, you're asked at what price did XYZ Corporation close on May 11th? That's kind of like number 3. Okay, and then, don't want to give that away too quickly. And then number 6 says, use the May 11th closing price, which you would find in number 5, and the May 12th opening price to represent the difference as a percent decrease. Okay, so it'll be another percent increase. Round to the nearest hundredth of a percent. So try number 5 and 6 on your own, looking at numbers 3 and 4 as examples. So go ahead and pause the video and try numbers 3 and 4. Try numbers 5 and 6, like numbers 3 and 4. You can go ahead and pause the video. Okay, so either way that you do it, option 1 or option 2 for number 5, you have to deal with the previous closing price of $49.58 and then doing an opposite. So in this problem, it was a minus 1.55. So we did an opposite because we're going backwards in time. And we got plus 1.55. And so that sum is 51.53. That's the closing price on May 11th. Okay. And then using this formula of new minus original divided by original, we will find that the new is $50.60 right here. Okay. Divided by the one we just found, 51.53, divided by 51.53 times 100 is negative 1.8%. So a decrease of 1.8%. So this can go up or down. That's that. Okay. Now, one more question to answer is on May 6th, the XYZ Corporation announced a decrease in earnings. This news caused the price of their stock to drop. This can totally happen. If a company announces a thing about their company, that can change people's trust in them going up or down in value, and so they may buy or sell at a higher or lower rate. Okay, because of this news of a potential price drop, it dropped. It closed on the next day after May 5th, next day at 44.37. Okay, and we're to express this as a percent change from May 5th to May 6th as a percentage. So the closing price on May 5th to the closing price on May 6th. So what this would look like as a percent change would look something like this, where we're looking at the May 6th, the new one, closing price, minus the May 5th closing price, divided by the May 5th closing price. I realized that I had missed times 100 here. It's not red, but hopefully you're okay with that. Times 100. And so what we get is plugging this in. So we get 44.37 minus 52.20 divided by the previous 52.20 times 100 is a negative 15%. So the stock dropped by 15% in one day because of this news. Okay, so stock can change by very little bit or by a lot based on kind of what the company announces about that stock. Okay, so that's 8-2 about stock market data, looking at kind of some summary data about a stock. Okay, and then answering questions about did it go up, did it go down, what's the high, what's the low, and what's the percent increase. Okay, now 8-3 is about stock market data charts. Okay, and so a question to discuss is why might an investor, someone who is investing, be interested in historical information about trading prices and volumes of a particular stock? Okay, so why might that be interesting to an investor? And that is largely because, I think all investors will kind of use past data to make predictions about what might happen in the future. We all know that past performance isn't an indicator of future success. That a stock going up and up and up previously does not mean it will keep going up forever. We all know that. But we'll see general trends and hopefully ride those general trends to make money in the long run. Okay, so that's why it's important. And so we're looking in this next section on 8-3 about some stocks that might be used as you look at historical data for stocks. Okay, so first we'll want to look at a stock chart and what a stock chart is in general. Here I am. Okay, so a stock chart is pictorial information of stocks from a day's worth of data to multi-year data trends. Okay, it can span anywhere from kind of hour to hour or minute to minute or within a day, or it could look multi-year. So I tend to also look at what is it over the span of its entire company, over the span of the entire, whatever mutual fund. What is their total history to look at, is there a general trend positive or is it negative? Is it very volatile? Does it go up and down a lot? Okay. One common stock chart is a line graph, like we looked at a long time ago with kind of just this jagged line going up or down. Okay, those you're probably familiar with, but there's two more that you probably haven't ever seen before. And the first is what's called a candlestick chart. Okay, it's a stock chart where each day or interval is depicted as a candlestick. Okay, now the entire candlestick can be either black or red if that stock lost money that day. Okay, so if it's black or red, that means it's a deficit. So this value up here would be the opening price, and this down here would be the closing price. So it started high, ended low, and the color of that tells you that it lost money that day. Okay, and then it has these candlesticks, these candle wicks on top and bottom, although most candles don't have it on both ends. But that candle, those little sticks up there, will give you the highest trading price for the day and the lowest trading price of the day. Okay, so also if the candlestick is white or green, then that means that it gained money that day. So let me just give you an example of that before we go on too much further. And that is, if you're with me on the printed materials, it's the bottom of the next page. Okay, this is where it's useful. Okay, so you're like, okay, one candlestick, what's the big deal? Okay, so this looks like you're given like 3 or 4 a month, so maybe per week is what this looks like. Okay, and so this is green, which means it gained money that day. So this was the opening. This is the closing price because it went up that day, but it had a very highest and a low and a kind of a lowest. Okay, the next day it's red, so it lost money. So the top would be the opening, the bottom would be the closing because it went down that day. Okay, and then it's red and it's red, so it's general trending down, right? Opening, closing. Okay. The next day is green, so it's going to go up. So this is the opening down here at the bottom and the closing at the top because that day it raised, okay? It would go down and up, up, down, up, 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 down, down, up, up, down, 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 up, up, down, up, okay? And keep in mind if it's green or white, then it's going to go from opening to closing going up. And if it's red or black, then it's going down, so it's opening on top, closing on bottom. Okay, so let me go back to this candlestick, and that's summarized here. Okay, that's a candlestick. Okay, we'll come back to those and look at those a bit more later on in the lesson. The other kind of stock that you might look at is a stock bar chart. Okay, there's kind of a lot written here about this, but down here is a stock bar chart. There's kind of two parts to it. there is a chart made of two graphs. The top shows information about the day's high, low, open, and close prices. There's kind of a lot packed in here. Again, you get each bar is a time period. It could be a day, so this happens to be a day. So this is April 28th, 29th, 30th, and May 1st and 2nd. Okay, but you have the bar here. In this case, gives you the highest trade price for that day and the lowest trade price for that day. Okay, but it also gives you these two little things here and here. It gives you the opening on the left and the closing on the right, the way we kind of reread. We read left to right, so you get opening and then closing. On the next day, you have opening and closing, but this is the highest, this is the lowest. I'm not sure what the order of those are, and it closes here. Okay, then it opens here, goes up and down all day long, but somewhere in between here, and then it closes here. And the next day, it opens a very similar price, up and down that day. This is the highest, this is the lowest, and then it closes here, right? Get the idea? Open, it moves up and down, highest, lowest price, it closes here. It makes a lot of sense to me, okay? And this is the volume of how many shares in millions were sold, bought and sold that day, or traded that day, okay? So the bottom part shows the daily volume. If you need more time with this vocabulary, go ahead and pause the video and take the time you need to copy this down. Okay, so next question we could ask, and this is about the stock bar chart, this one right here. Which day had the greatest high price? Well, the high prices are all these bars, and so the highest high price happened on the very last day, which was May 2nd. Okay, which day had the least low price? Well, the lowest price is down here, which happened on April 29th. So the greatest price was on May 2nd, and the least price was on April 29th. Okay, the next question is, between which 2 days did the after hours trading appear to have the biggest impact on the difference between the closing price and the following day's opening price? So that's talking about trades that may happen after hours, so between when a stock closed that day and when it opened the next day. I guess maybe it can still happen somehow, maybe via internet or something else. I don't know exactly, but this didn't change a whole lot. Between this closing and opening, didn't change a whole lot. Here, right here, it did change. So this price to this price, that's a pretty big jump, right? From this day's closing, this day's opening. So these after-hour trading did make a big impact. That's one of them. Between April 29th and 30th, is one of them. Okay, next, this is very, very similar. But here's another big difference. So something else happened where there's a pretty big change between the closing price on May 1st and the opening price on May 2nd. So the other is between May 1st and 2nd. Okay? All right. The next question is, approximately how many shares of Ford Motor Company were traded over the 5-day period? Well, I got to estimate how many of these are for each of them and then add them up. So the first one looks to be, I thought it was first like, 180, 185, somewhere around there. Again, this is not an exact, so approximate is fine as long as you're close. Then it's about 70, okay, and then about 75, and then about 70, and then about 90. I'm just estimating here. You add those all up, you get 490. But this is in millions. Don't miss that, the fact that it's in millions. And so you add those up, you get approximately 490 million shares were traded over this 5-day period. Okay? So the next question is, use the information below to construct a 1-day stock bar chart. Okay, where this is the open, this is the close, this is the high, this is the low, and this is the volume. Okay, so go ahead and pause the video and give it a shot. I've given you a blank graph on the right if you have my printed materials. And so you're kind of trying to sketch what that stock bar chart would look like with this information. So go ahead and pause the video. Okay, so the opening would open at 410. So that will start there. You can't really see it very well. That's 410. I'll just show you the whole thing. Okay, this is 410, the best I can kind of guess where that one might be. Okay, and then the bar will go, the bottom is the, well, I guess the top is the high, which is about 40.65, and the low was 39.39. Okay, just ask me what that is. You don't have to shade this in, I just did, because I thought it was easier to see. And the close price was 39.79. That's your, stock bar chart, but you also have the volume in millions. So down here I drew down here to 44.5 million. And you don't have to shade it in, I just did so you could see it a bit better. Okay, so if you've gotten that, I'm hoping you get the idea of how to read a stock bar chart with the opening and the closing price, but then also use the high and the low by the height and depth of the bar. Okay, so we'll turn our attention now to candlestick charts. Okay, right here. Okay, what is meant by green on September 7th and red on September 9th? So September 7th is green, 9th is red, and the difference is, well, the green means it went up that day, and red means it went down that day. Okay, so this would be the opening price on the bottom and the closing price at the top because it went up. This would be the opening price on top, closing price on bottom because it went down. So I just kind of wrote that down. The green on September 7th means the close price was above the open price. It means it went up. And the red on September 9th means the close price was below the open price. So it kind of went down. All right. Interpret a green candlestick that is shown only as a rectangle with no lines on top or bottom. This is a candlestick chart, okay? So there's no kind of wicks or these sticks on the top and bottom. What would that mean? Well, if there's no sticks, that means that the open price, it's green, right? So it's green, so it went up that day. So the open price would be the minimum of that day, and the close price would be the maximum of that day. Okay, so that's that I'm writing here. The low price for that day was the open price, and the high price that day was the close price. It could have gone up and down in there, but for some reason, its opening was its low for the day, and its closing was the high for the day. That's what that would mean. Okay, now the next question is, what is the approximate difference between the highest price and the lowest price for the week shown in the candlestick chart for September 7th through 11th. So in this chart right here, what's the difference between the high price and the low price? Well, the high price up here looks to be about 39.9. That's what I thought it was. Okay. And the difference and the lowest low price is about 37.75. So if you subtract those, then you get the difference of 215. Okay. The next question is, the lengths of the candlesticks for September 8th and 11th are approximately the same. So if you look up here, not the bars, but the whole stick, right? The whole stick is about the same between the 8th and the 11th. What does that mean? Well, that means that the difference between the highs and lows on those days are approximately the same. Okay, so that for some reason that difference between highs and lows on that day was about the same. This video is about the stock market data, so reading the summary data for a day, but also looking at charts like the candlestick chart and the stock bar chart. Thank you so much for watching. Have a great day.